Welcome to Small Cap Nation. I'm Jane King at the New York Stock Exchange, and with me today, Michael Markowski, founder of Dynasty Wealth, and always very interesting to talk to you. We've talked about negative interest rates, some of the situations going on globally. You've predicted the possibility of a crash in the stock market this year. You have an indicator, a crash indicator. It's recently gone from yellow during the month of March to orange, which signals a potential crash looming. So tell us about what happened there to make that switch.
Well, what happened is after the market closed on this past Friday, April the 1st, my indicator, even though the market closed up and at its high for the year, the Dow and the S&P, I put out an article that my signal went to orange, a pre-crash level of orange for the first time since I developed the signal, and it was yellow throughout the month of February. So so I put that signal out, and it was a headline on equities.com where I'm a contributor. So the signal, what preempted the signal going out was the volatility of the yen. The yen is one of my primary indicators, yen volatility, that is what prompted the signal to go orange. The yen has been very volatile.
Now, we've also talked a lot about negative interest rates, NIRPs, and you're very concerned about these, and Japan has a negative interest rate policy going on. So is this tied in to the yen? Is all that part of the same package?
Yes. What happened is, just to refresh your memory, for your viewers, okay? What happened was, after the Japanese instituted a NIRP, which is a negative interest rate policy, on January 31st, the markets became much more volatile, and based upon my research, I believe that increases the probability of a crash. I then went out, I did my research on the crash of 2008, because that's what I do investigative research. And I went and did that, and I figured out what caused the crash of 2008. And one of the primary indicators that signaled the crash of 2008 was yen volatility. If you look at, to give you an example here of what I'm talking about, the trajectory. See, the yen is really one of the key reserve currencies. So what happens in a market, whenever there's a crash, an impending crash, what will happen is investors, very sophisticated and savvy investors, will buy the yen instead of the dollar, because if the crash occurs, if the US market goes down by 50%, the dollar's going down with it. They know that. So what they do is they buy the yen. So the yen is a leading indicator of an impending market crash. That's why the signal went off, and it stayed orange all this week, and the market has experienced its most volatility in a month this week. The first 2 days of the week, the S&P was up or down more than 1%. It's going to be down more than 1% today. And so that's what's happened. So if you look at these charts up here.
Yeah. Now these are all currencies, right?
Yeah.
So let's go through these charts and explain what we should.
So this is this one here is a good example. If you look at the dollar versus, this is a chart here, a 1 year chart of the dollar versus the yen. If you can see here, I've got it depicted on the chart. You can see the trajectory from around the 1st of February to the 1st of March. You can see the trajectory here is a straight down shot, and that's what the markets hit their lows. Okay. Now you look at the same chart over here now for the euro versus the yen.
Okay.
It's the same identical chart pattern. Okay, so what everybody has not figured out is this has nothing. The yen's weakness, the dollars and the weakness against the yen has nothing to do with the Fed and interest rates. It has to do with the players are getting ready for a market crash. That's what it's indicating. Now, if you look, that's why the euro's going down lockstep. They're both down 1.5% to 2% today, both versus the yen, the euro and the dollar. Now, look at this chart. Look at these charts. Look at this one here. This is 2008's chart. Okay. Now look at August of 2008. Look at the dollar versus the yen here. You can see a crash that started in August of 2008, and that it did not bottom until 2009 here, as you can see at the bottom of the chart. So what I'm saying to you is, while the U.S. market was crashing, the U.S. stock market, the dollar was crashing against the yen all the way down, okay? Now, if you look at the next chart, here's the chart of the euro. It's the same exact pattern. So the yen is the leading indicator. The yen is signaling that the markets are going to crash.
Okay, so what will it take for this signal to go into red?
The indicator stays at orange. For the signal to go into red, the market would have to go down by at least, probably the Dow would have to go down by at least 500 points in one day.
Okay, you're talking about the Dow Jones Industrial Average?
The Dow Jones or the S&P, you'd have to see at least a 3% move in one day. And then that would be the signal that it would go to red, is what I'm looking for on that.
Okay, and how can we protect ourselves?
Well, there's a black swan strategy that every investor, look, I might be wrong on this, just a 1% chance that this thing is not going to crash. I'm always late. I mean, not always late, but I mean, when I predicted Lehman, in September of 2007 is going to collapse. Lehman, Bear Stearns, and Merrill Lynch in my Equities Magazine column. The market went on. It took 6 months for Bear Stearns to crash. Okay, and then of course Lehman went bankrupt a year later. So maybe my timing is a little off. In any event, investors need to follow a black swan strategy. Black swan. It's about. The strategy came from a guy who wrote a book that spent 37 weeks on the New York Times bestseller list. There's all over my site at dynastywealth.com. It explains this, but it involves sovereign bonds and all this other stuff. This is the only thing that an investor can do to protect themselves from a market crash and a financial calamity.
Okay, dynastywealth.com for more information about how to protect yourself from this. Thank you so much, Michael Markowski of Dynasty Wealth, for that information, and thank you as well for joining us on Small Cap Nation. For more information and more interviews, you can go to smallcapnation.com.